GMO!
Thank you for taking time out of your busy schedules today. I'll get started right away. Today, we're announcing the first quarter financial results. This is the executive summary of the first quarter, covering January to March. Operating profit was 3.53 billion yen, totaling less than that of last year. Although profit reached a record high in internet infrastructure, FX was temporarily affected by the market environment, as well as by the corrections to GMO ad partners' reported revenue in 2016. Next is the summary of each segment. Despite the strategic investments in Mine, Z.com, and .shop, operating profit reached a record high due to a 54% increase year-on-year in internet infrastructure. On the other hand, internet finance decreased in revenue and profit due to a rise in the low-margin currency pair of the US dollar and yen, and from a temporary drop in the earnings ratio because of an increase in cover costs. We're currently working on improving profitability, with revenue increasing steadily since bottoming out in February. We're making strategic investments in virtual currency and overseas business activities in the second quarter and are picking up steam. In online advertising and media, revenue increased and profit decreased due to the revision to GMO ad partners' net sales for the 2016 fiscal year. If you look at the original figures, you'll notice that our in-house products grew steadily due to investments over the past 2 years. There is no change in our view that new in-house products will cover the decreased sales of existing products. As a result, we are gradually recovering our trend as a whole. In mobile entertainment, revenue and loss both decreased. We are currently focusing on developing new titles. Moving on to the summary of business results from January to March. Although we made a late start, we still plan on reaching our targets with the strong trends in internet infrastructure and recovery in internet finance. On to the next page. As discussed in the full year results presentation, we have changed the name of the Internet Securities segment to Internet Finance. We will discuss the virtual currency conversion and transaction business later on. Moving on to our policy and theme for each segment this year. First, for internet infrastructure, it's to further expand our market share and increase customer satisfaction. Second is to launch direct sales under Z.com. Finally, we're aiming to further develop our unique product, .shop. We expect the profit for .shop this term to break even. For internet finance, we will expand the market share of existing products further. We're also aiming to launch Z.com, which currently operates in London and Hong Kong, into more overseas markets. New launches for this year include our internet banking and virtual currency businesses. GMO's policy is shown at the top of this slide to strengthen our strengths. However, online advertisement and media and mobile entertainment are not our strengths, but our weaknesses, so we will continue to strive to make #1 products in these areas. Next is the summary of first quarter financial results. Next is the quarterly earnings. Both revenue and profit grew year-on-year. As for revenue, based on our firm foundation of recurring revenue, Internet infrastructure has been growing steadily. Please notice the spike in Internet infrastructure here. Moving on to operating profit. Although Internet finance was weak this quarter, Internet infrastructure expanded steadily as shown. For Internet infrastructure, profit reached a record high despite strategic investments of hundreds of millions of yen in Minne, Z.com, and .shop. We expect this upward trend in revenue and profit to continue. Here you can see an overview of profit and loss. Information on the causes of major changes in increase and decrease are listed on the right. Continuing on. The next slide shows the balance sheet. GMO Click Holdings' balance sheet is shown on the right for reference, since our finance business has a large impact on overall figures. The consolidated balance sheet is shown in blue. Click Holdings figures are shown on the right. Interest-bearing debt increased due to the expansion of customer assets in Internet finance, and so is temporary. Next, this slide shows the market cap and equity share of our listed companies. Our group's total market capital is 544.9 billion yen, and GMO Internet's equity share totals 225.8 billion yen. This next slide shows consolidated cash flow for the full year. As discussed earlier on the balance sheet slide, operating and financing cash flow were affected temporarily due to the increase of customer assets in Internet finance. Moving on to the group overview. This diagram shows GMO Internet's 4 segments. The numbers in bold show the percent of our total revenue that each segment made up. Circled numbers show the segment's ranks in their respective industries. The squared figures show the active number of customers and users. Our customer base is expanding every quarter across all segments, with growth in infrastructure contracts, active users in media, and customer accounts and securities. We don't use words inferring a hierarchy, such as staff or subsidiary. Instead, we use the expressions group company and partner. This is also becoming a trend for a number of our partners. At the end of March, the number of partners totaled 5,080 people. 44.8% of our partners are engineers and creators. I think our strength as a group lies in such creative people. Our goal is to see that ratio of creators surpass 50%. I'll move on now to segment reports. This slide shows the composition of the Internet infrastructure segment. All products in this segment are number 1 in their respective markets. Currently, our domain market share is 90% domestically. I think everyone here does Google searches on their cell phones daily. That means 90% of the websites you find on Google Japan have their domains registered with us. Hosting is shown at a 55% domestic share, which means that 55% of the sites you look up on Google Japan are hosted by our data centers. Basically, more than half of the data in Japan is stored in our data centers. These are the earnings in Internet infrastructure. Historical performance in revenue for the first quarter of the past 5 years is shown on the left. And the historical performance of operating profit for the first quarter is shown on the right. In addition to conventional recurring revenue, transaction revenue from payment services and Mine has accelerated our growth. Also, our provider business is expanding. Profit increased significantly as we invested in next-generation products and highly profitable products, such as payment services and SSL. This is historical performance by quarter. Orange shows strategic investment. As shown in the slide, earnings achieved a record high. Of particular notice is the operating profit in Internet infrastructure, which exceeded 2 billion yen for the first time. This is the historical revenue in each subsegment. Due to the combination of recurring and transaction revenues, net sales has grown. Revenue has grown significantly quarter on quarter due to newly incorporated group companies abroad and the expansion of our provider services. This slide shows the summary for listed companies in Internet infrastructure. GMO Payment Gateway did better than expected in each business area. Operating profit of 1.6 billion yen exceeded expectations, with about 3/4 coming from the finance-related service GMO Pay Later. For GMO Cloud, SSL had favorable conditions, and GMO Paypable reached a record high in revenue, so both companies had steady growth. In Internet infrastructure, the number of contracts came to a total of 8.44 million, dropping from last quarter. This drop was due to overseas securities and is temporary. We expect the number of contracts to surpass 10 million by the end of this year for the first time. We also understand everyone's concerns about the recent leak of customer information at GMO Payment Gateway because of unauthorized access. In response, a recurrence prevention committee, including external advisors, has been established to both systematically and technologically prevent similar reoccurrences. All necessary measures have already been taken, and the financial effects of this matter are as shown. Related expenses are being incorporated into the first quarter. Moving on to Internet finance. This is historical performance by quarter for the last 5 years. Due to the volatile market, we had a strong trading volume in 2015 and 2016. However, this quarter both revenue and profit decreased because of a temporary decrease in profitability due to the increased trading volume of the low-margin currency pair of the US dollar and yen, and because of an increase in cover costs. The historical performance by quarter is shown. The factors that led to the fall in profitability were discussed earlier, but right now we're struggling to optimize cover trading. Since March, we have been utilizing big data analytics to level up our previous analytical methods. It's hard to separate the impact of market fluctuations versus that of our own analytics, but the result so far is that profitability has been on the rise since bottoming out in February. For 5 consecutive years, we have achieved the highest trading volume globally. Our market share continues to grow at a smooth rate. This slide shows GMO Click Holdings' major KPIs. In addition to FX transactions, products including CFD have also grown to become new pillars of profit. We are responding flexibly to the ever-changing market environment and will continue to expand our customer base and improve our services. Next is online advertising and media. This chart shows historical performance of the first quarter for the past 5 years. Despite revenue being flat and there being a drop in the sales of existing products and online media since the fourth quarter of last year, online advertising has had a steady ad technology shift. The overall momentum of businesses is going in a good direction. On the profit side, we're getting closer to reaping a harvest for new and existing products. I'll explain in more detail later, but there was a 230 million yen decrease in profit due to GMO AP and Nikko's revisions of net sales. Although the graph doesn't look good, with the ad technology shift in our products and enhancement of sales, we are already beginning to bounce back. This slide shows performance trends by quarter. Because our existing products are getting older, their profit margin has decreased. However, the profit from products related to our ad shift is increasing quickly, and we expect to see upward trends going forward. Shown here are revenue trends in each segment by quarter. In online advertising, in-house products are doing especially well. The major in-house product is called Akane. This slide shows the summary of listed companies related to online advertisement and media. Due to the strong demand in advertising, GMO Ad Partners and GMO Research grew. GMO Tech, where internal restructuring is underway, and GMO Media both saw a decrease in profitability in their social media-related products. It's embarrassing to announce, but based on the 2016 financial results investigation for GMO Ad Partners and GMO Nikko, part of GMO Nikko's reported revenue was found to be incorrect. After receiving an independent investigation committee's report, GMO Ad Partners filed amendments to their 2016 financial results. We've incorporated these changes into GMO Internet's financial statement for the first quarter of 2017, but there is no change in our disclosed forecast or dividend forecast, as effects at the group level are minimal. Recurrence prevention measures are not only being taken at Ad Partners, but at the GMO Internet group as a whole. Moving on to mobile entertainment. This graph shows performance by quarter. We've been working on getting costs under control, and as a result, loss was reduced. For our pipeline, we are planning on releasing a new title in Q2 and in the second half of the year. Next, I'll share several points about our group's strategy. First, I would like to discuss Mine. This chart shows quarterly transaction volume trends. In addition to seasonal campaigns, we strategically invested 230 million yen, mainly in online advertising, which turned out to be a very efficient move. We will build on this momentum and continue promotions from Q2 onwards. Moving on to the progress report for the new GTLD.shop. The number of .shop domain registrations exceeded 197,000 at the end of March, and as of today, it's exceeded 200,000, with over 20,000 new registrations being made per month. In addition to collaborating with various registrars, we will also be pairing the domain with ASP shopping cart services. Our group includes related services, such as Make Shop and Color Me Shop. By getting ASP cart services worldwide on board, we'll be able to further utilize the strength of .shop's character strings. Next is finance and payment. Developments in each area are continuing to progress steadily. For net banking, we have already entered into the full-scale development phase. This year, we'll continue preparing for the launch of operations. We recently announced the launch of Z.com Coin by GMO, which is a virtual currency conversion and transaction business. Virtual Currency FX is a service that enables leveraged transactions in the same way we offer conventional trading, 24 hours a day, 365 days a year. Virtual currency trading is a service where currency can be bought and sold in Japanese yen, and there are no transaction fees. This service will also be available 24/7, and we plan on gradually expanding from offering only Bitcoin to several tradable products. In Japan, a lot of people wary to use virtual currencies because of theft scandals on services such as Mt. Gox. In order to prevent virtual currency theft, we're preparing customer asset management and security systems. As you may know, traders of virtual currency must be registered with the Financial Service Agency, meaning users are able to do exchanges with trustworthy traders. GMO Z.com, which was created based on investments from GMO Internet and GMO Click Holdings, will apply our collective expertise on online securities and security businesses to offer #1 services safely, affordably, and conveniently. Next, I would like to talk about our global strategy. GMO Internet Group has already expanded to 55 locations in 18 countries and includes 1,151 partners. The locations in blue operate FX services. It's a bit hard to see, but they're in London and Hong Kong. The locations in red operate infrastructure-related services. Overseas businesses can be divided into wholesale and retail sales. Wholesale includes the .shop domain and global sign SSL service, which both have strong global demand. Retail sales are #1 domestically for infrastructure and finance, especially in FX. We are currently concentrating on expanding the Z.com domain in countries throughout Asia. And although we can't announce a deadline yet, our goal is to increase our overseas sales ratio to 50% as soon as possible. Currently, overseas sales make up 6% of total net sales, with revenue coming to 2.3 billion yen this quarter. We're also starting to see progress in Z.com's direct sales related to internet infrastructure and finance. Global Sign's wholesale SSL business has had steady growth, and we expect the overseas sales ratio to continue to increase. Our target ratio is 50%. We would like you to be expectant about both our domestic and overseas businesses. Now we're coming to the end of the first quarter presentation. There has been steady growth in infrastructure, and although finance services were affected by the market environment, our efforts to then improve led to sound results. In online advertisement, the strategic investment we began 3 years ago is delivering good results in the figures, and we plan to continue improving in this area. In the second half of the year, we'll show our strength as we enter the virtual currency business, launch internet banking, and by creating #1 businesses overseas to challenge ourselves in new ways. That concludes our first quarter presentation. Thank you for your attention today. Internet for everyone.